Good morning. Excuse me. All right. So I don't think I've seen so many topping tails in my whole life of looking at charts as I did over the weekend. All over the place. And the way the markets went up at the beginning of last week and then just fell apart on Friday, primarily. It started on Thursday, but primarily on Friday, created that topping tail. And depending on, which market you look at, the spiders here that we're looking at, it's right up an area of resistance where to turn. So the weekly here, while has not overcome major support here, this is an uptrend, right? Meaning higher lows and higher highs. So no, Dan, I'm not talking about this topping tail. I'm talking about this topping tail. I know this one is not real because there's no poke over here. So now the question becomes, can it break major support, this uptrend? And if it does, then we know that obviously after the fact that the weekly has followed through. But we've got this support here. We've got these converging moving averages right over here, how much that'll come into play. And so let's just get a blue line here, right? Those closes are overlapping each other over there. Put that up there. Last week's high, obviously, is an area of resistance, and then right, the next swing up there. But, based on that topping tail, right, we've already got, or should have, right? It went down to 279, right? So right around in here. 79. So you've got the confirmation and break of last week's low. So last week's high is where if you're bearish, you do not want to see prices get back up above it. Since this major support level is here, in this area, and these moving averages, I wouldn't be surprised to see some buying. It's typically what happens to see if we get a lower high, maybe an M top, or if this crazy market takes out the high, and taking out the high wouldn't necessarily mean that this signal is over. Sometimes you get little shallow retests where, it's drawing too loud here, where it moves up and has a little shallow pullback and it just makes a peekaboo and then drops. So it might be a little tricky yet, right? That's really the takeaway of this. Prices have fallen down here, right? 279, right in the area of that prior little low right there. Right? We always look to the left because that's going to tell us what the truth is. And so if it can't bounce much from here, you got a little resistance, and this is the obvious next stopping point around 273-ish, give or take, which is right there, right? So going into this week, we want to see how much downside can be created here. And, initially there'll be a trading range. So I kind of think there's going to be some choppy action going on here until things become more decisive. And this time frame, right, the daily, which is grinding up within this downtrend, right, this comes into alignment, and they're both pointing down And that's where, the holdouts, and maybe their holdouts are right for right now. Who knows? But that's where the holdouts are going to throw in the towel, and the momentum to the downside is going to pick up. All right. Let's clean that up. So, SPX. Getting a little close to the action, right, as this moves down. Let's just call it above 2,900 for the getting close to things, maybe 2,920, for a call spread. And I think for the put spread, since there's really nothing here, well, we got to see what happens here at the open. Prices are right, they're down here now. So if this premium, this deal, the further we can get away, the better it'll be. Right. So if there's something down here, but unless we get some, let's go to the futures here. If this consolidation is a retest, say it drops here at the open, right, which seems logical for that to happen since there's a little breakout failure here into the gap fill and it's unable to bounce right here. If it was to come down here and then spring back up again and get back up into this level, then I think the put side would be okay for today. Right? 2870. I wouldn't do 2870. That's pretty tight, Paul. I wouldn't go there unless you see it come down here and spring right back up again, personally. Other than that, the 2720 area makes sense. And so let's see if we get some retest reversal down here. You want to do the call side for 2870. Okay, I got you. You're right. Well, obviously you're going to get more premium. You're into this area here. So 2870. For my comfort level, I'd like maybe a 2880. Right? I want a no-brainer setup, but that's me. Some of you guys are a little more aggressive. Anyway, yeah, you get a little more of the way, take a little less and little less Alka-Seltzer. All right, so let's see. It is down. Like 1, 2, and now it's over here. So every time this market has tried to go down, I know this was the beginning of it, so it made sense. But over here, we had that gap down and it came right back again. So now it's closer to the resistance. So it does make a heck of a lot more sense technically for this to be an area where some corrective action is going to begin and then move lower. All right. Qs. How likely the day ends green? We'll know that in a little while. I mean, ending green wouldn't be a big deal here. Could be a day like this and how range bar and it's green, big deal, which would lead me to believe that maybe some sideways or a measured move down. The real evidence of a break is going to be if it violates this major support. Now, retracement concepts come into our analysis in that, look, it started the move here, it ended the move there, and the further it gets to this level, the greater the probability of getting below it. Now, buyers could come in early and, do that, of course, and then eventually it doesn't have to slam right down through it. So we've got a bearish topping tail. It was been hanging here for 3 weeks, trying to go higher. And when it tried to go higher, the sellers came in and slammed it down, and they're blaming it on Trump talking new tariffs with China. We're back to that from last year. So now coronavirus isn't enough. That seems to be fading. Now we got back to tariffs. So we just got more BS to deal with, and it is what it is. So technically, it's rallied to an area, and this decent retracement on the Qs. It's rallied up, got the topping tail. It's starting to break here. Let's just see how far down it's going to go. YM, same story all over the place. You know, moving up, momentum stalled, reversal there, and the tariff issue was that huge. Well, you know, they got phase one. Phase two may come. Some talk about that after the election. Who knows? And we'll see what happens. The same story looking to the left. You got a little shelf of support there. You got the major support lower. We've got a topping tail. It's in at resistance. It makes sense for it to come down here and do a retest somewhere between here and here. And we'll just see what that is as it unfolds together. Now the Russell, right, that was actually the one that was the winner, meaning it was doing great. It looked like it could go higher. You know, the prior 2 weeks, I talked about this actually being more of a bullish pattern when the others were going up, and it actually worked out. But then, you know, obviously everything knows what happened, the reversal and then the move down, and same old topping tail. And it won't take much to do a retest of the lows with this pattern because it's so close. So still, you know, last 3 weeks doing nothing, which makes it that much more important for buyers to hold this level if they can do it. You know, you have a few weeks of accumulation, and if that fails, I mean, they're going to hit the bid. I mean, it only makes sense that that's what's going to happen because this was looking great, and the depth of retracement isn't what's supposed to happen. Clearly, there's going to be stops down here, and a poke down through that is going to bring in supply. And from my perspective, I would have no interest in any kind of intermediate term buy unless it was down here and I saw a pattern like this, you know, and I think that's what the majority will do, is wait for it to get down to a level that makes sense to buy again. And oil, well, that's messy. You know, the contract still stabilizing here. Goldman making bullish comments today on they're positive on crude oil for next year. That's all well and good. Seems like a pretty no-brainer idea to have after, you know, falling from $60, $70 down to 10, that it's extended on the downside, almost getting down here, right, on this contract down here, to think that it could move higher, and maybe some of these oil ETFs starting to do better. They actually did pretty good last week in comparison to a lot of other things on their performance. Nonetheless, it's just a grinder, the same grinding move to the upside that we've seen in many markets and sectors. It's got the same topping tail. And I would agree that if it were to get a nice W-type reversal down here, it would be a good intermediate term buy to start to put on a position and see what happens over the next year. Bonds still just flat as could be. It's just flat as could be. You know, waiting for what? We'll find out together. I don't know. Gold up here a bit, but just a sloppy pattern overall. You know, looking at the higher time frames, and that's what we do. When you see sloppy patterns in a lower time frame, you go to the higher time frame and see, does it make sense? And there's a consolidation after a move up at resistance, so it makes sense. Right? Theoretically, it's building up an area of support to push higher, right? And maybe get back up to 2000 or above. We'll see. You got a giant rounding bottom that occurred over years, and that's bullish. And transports, well, you know, this is going down today. down here at 140 with the airlines. And what's Boeing doing this morning? I was curious. 126, heading lower again. So, bearish markets this morning following through to last week. Amazon, as you know, right, big gap down, further down this morning. Apple, that was doing so great in the face of the weak market, gave it back. And we've got a bearish weekly pattern. And if that breaks the low, well, and Amazon's weak, what's going to hold things up here, right? So I think that's it. Things look like they'll go lower. Look at all the airlines here, negative, down, Delta down 10%. Starbucks is down. It was already weak. Microsoft, holding up, but that's weak. So, things look like they're going to head lower, maybe a little choppy here to start the week off, and we'll just see how it all unfolds. All yours, Dan.
Good morning, everyone. Yeah, Greg just covered 2 of our opens in the weekly. Amazon, yep, we have a call spread on that. Beautiful gap down. And Apple, yeah, we sold a put spread on the bullish reversal and had it, topping tail. I said, I don't like that, obviously, but our stop's under the low. And with a big down market, it's actually showing relative strength. It's only down, well, actually it just turned positive. It's up 11 cents. So anything green in a weak market is strong. Adobe, we have a put spread. It's a 330, so it's way down here. We'll just have to let that play out. And that's it in the weekly. Swing ladder, we're also pretty light. AMAT, we have a long put. Baidu, a covered put, which is short stock, short out of the money put. JHG, long stock. I can't tell where it's gapping, but it was relative strength. We bought it on the gap breakout on Thursday. And finally, Verizon, we shorted into the close on Friday. Beautiful afternoon breakdown. Huge resistance overhead, sell setup on the weekly. So that's it. That's all our opens. YouTube is asking about Tesla, lower on Elon Musk. And, I read in the paper that, and, I didn't see the news live, and I don't know what percent of this is the cause of the sell-off, but apparently Musk came out and said his stock price is too high. He's a very interesting cat. Yeah, I mentioned John. Yeah, we have Adobe. Yeah, we only have 3 opens in the weekly. So I don't know what he tweeted this morning, whatever, we're just chart traders. That's a nasty gap reversal. That's what I call a bullish gap that buries. Bullish gap fills the gap. That's an ugly reversal pattern. It's in a downtrend on the 15-minute chart. So it could be a day trade short. You got a sell setup right here. Zoom. Oh, accounting error on Tesla. Oh, those accounting errors are not good. We had a call spread on Tesla, another bearish gap reversal, then with a 1, 2, 3. Then this is what we call a bull sandwich. Then it had a gap breakdown. We were shorting out of the money call spreads. It's up today in a weak market. You just got to see if he'll set up as maybe a day trade, maybe target this gap fill from Friday's or Thursday's gap down. And I saw it. It's in my gapper list. I saw it, was considering a put spread, but he's volatile. That concerns me for 5 days. Let's continue here, gappers. This one's down some 1781. This is what we call a bullish igniting bar, and then 1, 2, 3. But I don't like the light volume overlapping bars, but I'm just guessing. That's one of these Corona stocks. Resi down 8. Oh wow, that's a big gap down. All right, this one very well could be what we call a gap and snap. So I'll put that over here because that's multiple down bars, then a big gap, and then we just go to our intraday to see how it sets up, and you can see buying did step up on the gap down. Disney got a downgrade, and this Wednesday we're going to be talking about triangle patterns. And I need to find a couple, failed ones. And I actually wouldn't call this failed because this was an ascending triangle breakout. A beautiful one, actually. But then Thursday, you got that bearish gap. Bearish gap. So if I were long that, I would have had to stop under a 5-minute low. Starwood here, earnings gapping up. Beat up hotel. Keep an eye on it. Yeah, as you know, airlines, cruise ship, hotels, restaurants, casinos have been getting whacked. Look at H here, Hyatt. That was kind of another breakout failure, but this one didn't get very far, which is relative weakness. Now it's gapping down. That's actually a good gapper. That is going on my gap list. H. WOK. Well, let's look at the other ones. The big three are Marriott. Now, see, that was stronger because it broke out more. So it's gapping to support. So H is superior. Finally, Hilton. Gapping to support. So old Hyatt here is the best looking short setup. I like that one. Wilk had earnings. I can't tell where you're gapping. Same with this, but it's, bearish, lower high breakdown. Peg, there's no volume pre-market. I don't know what it's doing, but that's too extended for me to want to do anything. $1.90, I don't trade $2 stocks like that. 1544, gapping down a tiny bit, but no pattern. Pets, wow, Pets had a nice move here. There's no pattern. SRE, keep it on the short list. We'll come back to you. Tyson had earnings, gap down, bearish gap down under a bunch of major support. That's worth watching. Hey, Debbie, and I think Barron's had a bullish mention on Tyson. You got to be careful giving those opinions in the earnings. WAB, can't tell where you're trading. L is a bearish breakdown. Let's keep that on the short list. These are still a couple earnings trades here. 2874, call spread candidate. AAL, I just threw this in here. And this was interesting. The airlines are just getting creamed this morning, like 10%, even though the broader markets are down less than 1%. And Buffett had his Berkshire annual meeting Saturday, and he was talking about him liquidating all the paper said he had positions in 4 of the major U.S. airlines, and he dumped them all, saying, and so the reason they're down another 10%, not 1% fundamentally changed from Friday. Nothing. Correct, TJ. That's exactly the point I'm making. That's exactly correct. That, and it always blows my mind when nothing has changed, but you put it on the cover of Barron's or Berkshire. Buffett's talking about how bearish it is. They move stocks because people are what hit the buy and sell button. And that's why we say that we trade emotion, we trade fear and greed. But nothing has changed in the airlines. We know they're horrible. I mean, these patterns, you know, we had a 2-day little rally and got slammed right down. I wouldn't touch these airlines right here. Let's look at a couple others. United, horrible. JetBlue, horrible. Love's the worst. This big descending triangle. Remember we were short this, but then we got out before earnings. It looks horrible. Save, horrible. ALK, horrible. Cruise ships. Yeah, we'll just take our stops, see if it hits. Yep, yeah, our ETF is in jets. Yep, yep. But now we got an ugly gap today. Cruise ships, we had a nice little couple-day rally. They're getting smacked down. And you know, this sector is in trouble too. We said there could be some bankruptcies here. Sure. JHG, I can't tell where you're gapping, but I like the pattern, sure. Jets, okay, so it's gapping down $1. Our stop is under this base, and it's gapping right to our stop, so we're going to use the 30-minute low. Let me tell our subscribers that in the ETF letter. Continuing here. Somebody says the Feds, wow, look at United here, gapping under last week's low. These airlines, wow, Buffett put a hurting on the airline sector today. Somebody says that the government's going to be buying Boeing at the open here. I have no idea what that means, but what I can tell you is that's a bearish gap, bearish pre-market. I know it has earnings this week. I don't know what day, but I surely would not be fighting the tape on that. That's bearish action right there. Look at Zoom here. Zoom. Let's see if it's, you know, I don't do anything in the first 5 minutes, particularly on Mondays, but let's see what happens. Let me continue here. Play, another one of these, you know, 3-day rally. This was, Greg calls this a junk rally. But we got some beautiful returns in the junk rally. But look how all these things are getting slammed right back down. Play is you know, the Buster thing. 6 was another beat up one. 6 Flags. Not as bad as play, but no pattern.
Probably a lot of people will be riding them down right into the sewer, Dan.
Exactly, because they don't know how to get off the bus, right? We're experts